TheoTRADE. This is Don Kaufman. It's October 2nd, 2024. Just moments to go to the cash close here on this Wednesday afternoon with the S&P futures massively unchanged. Look, there is a lot more going on inside of this marketplace right now than the S&Ps. And speaking of the S&Ps, look, it might be a relatively quiet day, but it's about to get good. It's about to get good in a hurry. Look, I'm going to explore a lot of different areas here in this evening's video. We got to talk a little bit about the yen. Obviously, there's huge movement in the yen, which relates a little bit to the bond market. Then you got some interesting movement in volatility on the volatility front. But then we've got to cruise over to retail. I mean, if you haven't looked at retail, obviously Nike had some numbers, but things are getting dicey in retail. Oh, there's a lot to be nervous about in this marketplace. Nevertheless, let's start in, we'll start in the quiet area over here, is the S&Ps. And the reason I'm starting in the S&Ps is I want to reiterate a point. It is about to get good. When I mean it's about to get good, well, first of all, we're already seeing a lot of two-sided trade, but volatility is really going to pick up to the latter portion of this week. And, you know, we've been talking about that throughout the course of the week. Take a look at the SPX. Let's go to the mother of all products. First of all, I want to help you guys kind of handicap the remainder of what's left of this week from a bigger point of view. Look, if you're going to sit here and start to prognosticate about directional bias, you're going to get your head taken off, because everything we know about volatility is just saying, like, look, volatility right now is amped. And what's weird about that, and it is weird, you know, you're a couple days removed from an all-time high in the marketplace, right? I mean, you can argue basically that even like yesterday before some sell-side activity, you're basically sitting at the all-time high. And what is so strange about that is you're sitting at an all-time high with a VIX, though, that's, well, elevated. Okay, of course, here we go. It's an election, but it's not. The volatility that we're looking at is right in front of us, and I'm going to point that out. So I wanted to give you, first of all, a kind of an orientation of where we are. Where are we on the week? And, you know, the truth is, where are we on the week? Well, the week started here in the SPX somewhere around 57.38. We're trading about 30 S&P handles lower. You realize that 30 S&P handles means absolutely nothing. So I don't want to hear it. Or for the most part right now, there is the closing bell. For the most part, we're massively unchanged on the entire week. So 3 days into the week. Now, I'm going to remind each and every one of you that this marketplace early in the week was expecting a 100-point move higher or lower. Now I can sit here and again, I can talk about volatility until, you know, the cows pretty much come home, but I'm going to tell you right now, I think you need to anticipate. Okay, let's get ready to rumble. This marketplace is going to move, and I'm going to show you exactly why. It is incredibly rare that we don't touch an upper or lower edge of an expected move. Very, very rare on a week-to-week basis. Last week, we actually didn't. We got very, very close to the upper edge of the expected move. Okay, this week, we haven't done anything yet. I mean, as I said, you know, we just haven't done anything. And it's really rare not to touch the upper edge or lower edge of an expected move. But it's even more rare to have 2 consecutive weeks, okay, that don't do it. I mean, look, people, it happens, and it can happen. But I think you need to anticipate, okay, these levels are absolutely in play. And again, I'm going to give you both sides of the marketplace really quick. And that is about 58.38 to the upside. That's in the SPX. Okay, to the downside, you're looking at about 56.38. So as I said a moment ago, get ready to rumble. There's a lot of volatility packed in over here. Even the SPX is still displaying like a $70 expected move for the remainder of 2 trading sessions, which is wild given the fact that this whole week was expecting like this 100-point move. So there's a lot going into, you know, jobless claims comes out tomorrow. In fact, there's a lot of data, in fact, coming out tomorrow. You've got factory orders, you got jobless claims, you got some PMI, composite final. I mean, all this crap, though, is coming out basically, you know, and sequentially. But the big one, of course, is going to be the employment situation. We got a situation here on Friday. Everybody realizes that. Okay, push it aside for right now. So the first thing that I want to elaborate on is you have the propensity to be able to move substantially between now and Friday, period. There's no if and or but about that, for a marketplace that was unchanged. The next thing is volatility is still really wild, okay? Really, really wild, because you're looking at the 14-day vol futures, okay, and they are way over by a full point the 49-day vol futures, which just basically says in the next 14 days, the proverbial crap is still going to hit the fan. You look at the VIX all you want. The only thing you can learn about the VIX is like, holy crap, why is the VIX coming up so much? Like this week has been pretty chill. That's not that chill, is it? Like the VIX seems like it's very overreactive, right? And it is. It's overreacting, but it never overreacts, okay, in the midst of like a slow marketplace. So it actually sees risk. The next thing on the screen over here, you got to take a look at the bond market. The bond market got whacked and actually bid back up. A lot of the action, though, in the bond market, okay, is brought to you by, well, an absolutely horrendous move inside of the Japanese yen. So the Japanese carry trade, that yen carry trade is coming back into style. Now, that's something we're going to explain a lot more while live on TheoTRADE, both tomorrow, the next day. We'll be talking, of course, about the yen carry trade as it's going to be back in style because Japan basically signaled that's it. They're done doing anything with their interest rates. We're cutting and they were raising, and they're not going to raise anymore. So all of a sudden, okay, this carry trade is going to work again. I would expect you might see some more sell side activity specific to the yen, and this can be just the beginning, which could actually help lift the dollar. If you start seeing the dollar rallying, okay, that could actually hurt gold in the near term. So it's a wild, convoluted trade where Japan is actually influencing, okay, the dollar is influencing gold, dogs and cats living together. Some wild stuff going on. All right, moving on. Okay, so again, the big takeaway over here, a lot of volatility packed in. The next thing we have actually got to discuss here is before I go any further about volatility. Okay, one last concern on that particular front. Now jump back and go VVIX. And this one actually deserves a minute or two. The VVIX, the volatility index, we actually spent most of today's trading session above the 110 level. Now, why didn't I talk about this a couple of moments ago? Because as I said, I think it really deserves, this one's like, give it a moment, let this sink in. There is huge hedging activity going on. Now, I believe it could absolutely be that yen trade has caused again, a bit of like what we term, there's systematic risk in the system. And all of a sudden the volatility comes up because of that yen trade. It's very, very plausible. But it's disconcerting because for those of you that don't know what the VVIX is, it's a really good measure, okay, of the professional world kind of hedging. And even though the VIX is down very slightly today, okay, they're still trading huge contract size inside of the VIX, and there's just this immense amount of hedging activity that continues to kind of resonate in there. And again, I'd be remiss not to mention like spending part of the day above 110. 110 is usually not congruent with markets that are at or near all-time highs. Like usually when you're at a 110 VVIX, you're in the middle of like an absolute crap storm of a marketplace. And you can see just that, this 2020 during the COVID crash, and even 2022 in the midst of like some heavy volatility, it shot up again. But this is pretty extraordinary. Most of the last few years, again, not including 2000, obviously 22, there was a pretty bearish marketplace. But if you look at like the last, almost 2 years, the VVIX is completely under, if you will, that 110 region. Look at the neighborhood we're living in right now because it's a pretty wild neighborhood. And again, it's peculiar to see that associated with markets at or near all-time highs. All right, I just wanted to get that out because if you start seeing like just absolutely tumultuous volatility, look, you just can't be surprised. Next in the docket over here, it's rare on these nightly videos that I talk about individual stocks. It's not that I don't trade individual stocks, I do, but here is yet another major retail stock that had earnings, and sees some sell side activity. Compound that with a little bit of Tesla, their deliveries out there, the market didn't necessarily like it. It's like everywhere that I look, if it pertains to anything retail related, is taking hits. Pay attention. Look at like XRT. XRT just in the last few trading sessions, has come down pretty good over here. If you take a look at the expected moves, it shattered through the lower edge of an expected move. Okay, look, it's not time to start running for the hills over here, but as I said, it is absolutely peculiar that volatility is kind of screaming right now. VVIX is confirming that. Even the skew is confirming there's heavy vol actually coming. Then you actually spin around, you start looking at like the yen, and that's getting wild in there. Compound some of the risk with what's going on in retail. I think we have an economy, okay, that is starting to hit the brakes and hit the brakes rather hard right now, okay, but we haven't seen anybody big warn other than like, okay, Nike, it's a one-off. I've heard that a million times. Nike is a one-off. Dollar Tree is a one-off, okay? Dollar General, it's a one-off. Yeah, they're starting to compound in terms of the number of issues with retail stocks. We're going to be watching this very, very carefully. Again, to reiterate, in the next 2 days of trade, though, yeah, prepare for impact. Volatility is going to hit us and hit us fairly hard in that time frame. You know, when it comes to the S&Ps, though, I'm looking at this like 30-day 1 hour. Obviously, zooming in over here, we have been trapped in an incredibly tight range. I think you anticipate, okay, you start to break outside the range, higher or lower, things are going to get a little bit crazy. Now, I'm coming into this. We don't have a lot of levels to latch onto, people. Like, I'm not going to sit here and, as I said, prognosticate about, you know, the bias. Okay, to hit the all-time high, sure, absolutely. Okay, all-time high is just, you know, stone's throw away, but there's just no question. The risk right now, okay, can consume you. The risk to the downside is considerably larger than upside potential. And that is something that you need to keep and be mindful of, okay? Just keep it right there in front of you in the next few days to come. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.